So usually what you would assume happens is that altcoins bottom against Bitcoin first, and then they bottom against the US dollar. That's what happened in the last cycle. So that's the way I see this playing out. I see that, 2025 being kind of like the start of the bear market, and then going into 2026, and then hopefully we can find a low by mid to late 2026. And then next cycle, I think that altcoins will probably do better than they did this cycle. But one of the reasons for that is because I think that when they replace Powell as chair of the Federal Reserve, they're going to put someone in who's a lot more dovish. And I think they're going to try to rekindle the animal spirits. And it's going to make people want to potentially invest in higher risk assets again.
As the crypto market moves deeper into 2026, one of the most dangerous assumptions investors can make is that every cycle must end the same way it always has, with euphoria, retail frenzy, and a final blow-off top. According to Benjamin Cowen, that assumption may already be proving false. In his latest analysis, Cowen outlines a sobering base case that Bitcoin has likely already marked its 4-year cycle top, not in a moment of speculative mania, but quietly, on apathy. Cowen's outlook stands in sharp contrast to the prevailing optimism across crypto social media. While many analysts are still positioning for new highs in 2026, Cowen argues that the data paints a much colder picture. From historical return on investment cycles to social interest metrics and macro liquidity trends, his conclusion is clear. Bitcoin behaves with remarkable consistency over time, and this cycle has already lasted just as long as the last two. What makes Cowen's analysis especially compelling is that it isn't dogmatic. While his base case points toward a prolonged bear market, with a potential bottom forming sometime between mid and late 2026, he also acknowledges a rare but plausible alternative, a scenario in which Bitcoin sweeps its prior lows, rallies sharply, and briefly reclaims momentum, similar to what we've seen in equities like Nvidia and Google during past market structures. At the same time, Cowen zooms out to the macro environment, where the real catalyst for the next sustained crypto expansion may ultimately come from. With Jerome Powell expected to be replaced in the coming years, and U.S. monetary policy likely to turn more dovish, Cowen believes conditions will eventually emerge that favor risk assets again. In this video, we'll break down why Cowen believes Bitcoin is already in a bear market, what the data says about potential downside and recovery paths, and what this means for Ethereum, altcoins, and long-term crypto investors. If you value clear, data-driven analysis over hype, make sure to like the video, subscribe to the channel, and stay with us as Cowen walks through some of the most critical insights for the years ahead. Thanks, and enjoy the video.
I think this has been a very interesting cycle because in one sense, you could argue that Bitcoin tops when it always does, right? Like at the end of the post-halving year. And there's actually a really interesting chart I could share with you guys to show you what I'm talking about. So if you look at this chart, this is the ROI of Bitcoin from the low, so from the cycle bottom. So to provide some context on what this chart is even showing, if you look at the Bitcoin chart on TradingView, what you'll see is there's these major lows that occur every 4 years or so, right? And if we just take the ROI of each of these, we just look at those cycles and we overlay them on top of one another, you get a chart that that looks like this, right? And what's interesting is we've had diminishing returns once again, where every cycle we don't go up as much as the prior cycle. But David, what's really interesting is that this cycle, assuming the top is in, which obviously a lot of people are still debating, it's only lasted 1,000. It lasted 1,062 days. Last cycle lasted 1,059 days. And the cycle before that lasted 1,068. So it's hard to look at that and not at least consider that it's over, right? Like it's hard to look at that and be like, all right, we're going to ignore it. No, I feel like it does require some context. What's really interesting about this top in particular, and it's like what are the bulls looking at to claim that Bitcoin owes us something else from here this cycle? Because in many ways, it did what it always does, and perhaps we're just in the bear market now. what I think a lot of people are frustrated by is that a lot of like the main indicators that people have historically looked at to sort of call cycle tops, whether it be like things like the terminal price or the pi cycle top or whatever metric that you want to look at, like none of those actually triggered, right? And so what I was looking at was the social interest, which we track a lot at Into the Cryptoverse. And this is the price of Bitcoin color coded by social interest. You can see that Bitcoin, it had a top in October. Good chance it is the top of this 4-year cycle, but it topped on apathy rather than euphoria. So like in 2021 and in 2017, we topped on euphoria, but in 2025, we topped on apathy. So while the 4-year cycle top occurred when it always does, what's really interesting is if you look at the bear markets, if you look at the current bear market and compare it to the last couple, you can see that we're actually well above where we were. Like at this point in prior bear markets, Bitcoin had already dropped like 50% or more at some point, 50 to 70%. This time it hasn't. And so what I say is instead of just comparing it to the prior bear markets that started in the post-halving year and then went through the midterm year, if you look at the social interest, you have to say, all right, when is the only other time in history where Bitcoin topped on apathy? And it was in 2019. Now, if this is the only metric that we had, I don't know that it would be enough of a coincidence to look at, right? Like it's just, okay, so what? But one of the interesting things about this coincidence is that in 2019, Bitcoin topped in June, right? It topped in June and then it went down. It topped basically 2 months before the Federal Reserve ended quantitative tightening. So the Federal Reserve ended QT on August 1st, 2019. Bitcoin topped in June. This cycle, Bitcoin topped October, and then the Fed ended QT in December, right? So just a couple of months away. So there's a lot of similarities. And so when you actually look at this bear market compared to the bear market that came off of that 2019 high, it actually looks like we're tracking it pretty closely. So my thought process right now is that we're in a bear market, like Bitcoin is in a bear market, but structurally it's a little different than some of the prior bear markets because we're bleeding a lot slower than the prior bear markets. And the reason we're bleeding a lot slower is because we topped on apathy rather than euphoria. So I do think that October was the 4-year cycle top. It's just that the bleed is more like the 2019 style bear market. And so like my base case is that Bitcoin is going to drop into the summer of 2026. I think we face macro headwinds into the summer of 2026. But if you made me say, well, Ben, what if the 4-year cycle is wrong, right? What if this time is different and you're on the wrong side? Find me the bull case. If you made me do that, what I would say is this. I would say Bitcoin put in a slightly higher high. And if it sweeps this low, it's not impossible for it to rally to a new all-time high, right? Like if it came down here, it's not impossible for it to go back up. That pattern is actually something we saw NVIDIA and Google do last year. So if you look at the NVIDIA price chart, you'll see what I'm talking about, right? So NVIDIA also had a slightly higher high. It swept the low, and then it went to a new all-time high, right? Google, I believe, did the same thing, right? So you have a slightly higher high, you sweep the low, and then it rallied to a new all-time high. So it is possible for something like that to happen and for the 4-year cycle to break. But what I would also caution people against is that we also had a kind of a similar setup in 2019, not exactly the same thing, but we had sort of this low by Bitcoin. And we then swept the low, right? You can see we had a low. We put in our high 2 months before QT ended. We then swept that low. And right when we swept it, Bitcoin had this massive rally back up to $10,000, right? What's really interesting is that the current price action is essentially just a 10x multiple of what happened in 2019. Because if Bitcoin were to drop to this wick right here, and maybe it goes slightly below it, to say 73, 74K or something. What's really interesting is that's where that drop was in 2019, was right around 7,300. So basically just 1/10 of the price. And what happened is that Bitcoin, after that point, it rallied back up to 10K.
Looking further out, Cowen points to the 200-week moving average as the level that consistently comes into play once every 3 to 4 years. Sometimes price briefly dips below it, sometimes it holds as a floor, but it almost always becomes relevant near major macro bottoms. In his view, this long-term support is likely to come into focus by the summer of 2026, or by late 2026 at the latest. That timeframe aligns with his broader thesis that structural macro pressure, rather than sudden panic, will define this downturn. And while Bitcoin's path is central to the analysis, it naturally raises deeper questions about what this environment means for the rest of the market, particularly altcoins, investor rotation, and whether another true alt season is even possible under current conditions.
So in 2019, there was not a rotation, right? So because we topped on apathy rather than euphoria, there was not a rotation. The alt seasons that people talk about, so if you look at the Bitcoin dominance chart, what you'll see are there these massive periods where Bitcoin dominance like falls off a cliff in 2017 and in 2021. And if you look at the social interest at the time, if we go back to the raw value here rather than color coding it, you can see that retail interest was trending up throughout 2017 and throughout 2020 and 2021 before alt season even happened. The problem is that we're seeing the opposite today. We're seeing retail interest actually go the opposite direction, right? It's going down. If anything, more retail participants are leaving than coming into the space. There's more institutional interest. Absolutely. But there's less retail interest right now. That doesn't mean retail won't come back. I think they will, but I think they require much looser monetary policy in order to do that. And I think also they need to actually trust the cryptoverse more because there's been a lot of like scams and stuff this year, the last couple of years, of people, meme coin craze and stuff that I think has made a lot of people skeptical about investing in crypto. So I think we're going through a maturing process. So I think like every year, you will have some altcoins that can put in new all-time highs, even on a Bitcoin lower high. David, even in 2022, we saw Luna put in an all-time high in 2022, and then it went to zero, right? So yes, you could have some alts go to all-time highs, but I don't think you'll have a massive rotation into altcoins that leads to an alt season, if that makes sense, right? Even like, think about it. In 2023, we saw Solana rallying, right? In 2024, XRP. 2025, more recently, we've seen Zcash rally, right? So every year, there's something that's rallying, but that doesn't mean you're in an alt season. So maybe next year, who knows? Maybe Ethereum can do better than some of the other. I don't know. But the point is, while there might be some cryptocurrencies that do well, I think the collective altcoin market will still struggle for some time.
And so it begs the question as to what institutions and large players will view the crypto market in a few years. Is it just going to be Bitcoin that people will be interested in?
No, a lot of people would be surprised to hear me say that. I think that Bitcoin has been the easy play for the last few years, right? It had everything behind it. You had higher rates, you had quantitative tightening, you had this bull market that was basically a Bitcoin maxi bull market, where everything else was bleeding to it. But I've been around crypto long enough to know that, what is dead may never die. I mean, it kind of seems like we just have this habit of repeating the cycles. And so one of the things that I look at to try to maintain some level of like taking the emotions out of it, right? Because when altcoins are bleeding for this many years, like it's easy to sort of let that get to you if you hold a lot of altcoins. I haven't. But if you look here at this chart, this is total 2. So it's everything besides Bitcoin minus USDT. So we're subtracting out USDT and then in parentheses, and then we're dividing everything by the market cap of Bitcoin. So when you look at this, what you'll see is that altcoins have been bleeding against Bitcoin since 2021, right? But they also did the same thing last cycle. What you'll notice is that in the 2017-2018 cycle, they basically bled down to near the current levels, right? So in a sense, it's not really that different. It's just that when we get down to these levels, all the way down here at these lows, people say that it's all dead and it'll never come back. What I think is the most likely outcome for altcoins is I honestly, I still think that alt Bitcoin pairs might fall in again and form a low, maybe a double bottom or a slightly lower low. But I think they're going to do what they did last cycle, where they just kind of consolidate down at these lows for a year and a half. A lot of people thought, I think mistakenly, that the minute alt Bitcoin pairs come down here, that you have an alt season. But remember, guess what year alt Bitcoin pairs hit the range lows last cycle, right? It was 2 months before quantitative tightening ended. It's all this, or no, they hit the range lows a month after quantitative tightening ended. Sorry, a month after quantitative tightening ended. And around the time the Fed funds rate was near the 2-year yield. So I think what's happening is you're probably going to see altcoins stop bleeding against Bitcoin in the coming months. I'm not saying it's over yet, but you might see them slow down that bleed for a little while as they sort of fall into these range lows and try to form a low. That doesn't mean they can't go lower on their USD pairs, David. And this is what I try to communicate on my channel, is that when alts bottomed against Bitcoin in the last business cycle over here, when they bottomed, they still went down on their USD pairs. And the reason they went down was because Bitcoin went down. So if you look at Total 3, yes, they bottomed against Bitcoin and they started to go up against Bitcoin, but that's not an alt season, right? They were going up against Bitcoin because Bitcoin was dropping more than altcoins were. And the reason for that was because altcoins were already dead from the 2018 bear market, right? So they had the 2018 bear market where they dropped like 99%. And then Bitcoin rallied several 100% in 2019. It was a Bitcoin maxi bull market back then too. So that when Bitcoin finally rolled over, the altcoins had already gotten annihilated. So when Bitcoin started to drop in that bear market, when QT ended, altcoins actually went up against Bitcoin. But the reason they went down on their USD pairs was because Bitcoin dragged them down at that point, right? The overall market went down and then the altcoins went with it. So usually what you would assume happens is that altcoins bottom against Bitcoin first, and then they bottom against the US dollar. That's what happened in the last cycle. So that's the way I see this playing out. I see that, 2025 being kind of like the start of the bear market, and then going into 2026, and then hopefully we can find a low by mid to late 2026. And then next cycle, I think that altcoins will probably do better than they did this cycle, which is not saying much, right? Admittedly, it's not saying much. But one of the reasons for that is because I think that when they replace Powell as chair of the Federal Reserve, they're going to put someone in who's a lot more dovish. And I think they're going to try to rekindle the animal spirits. And it's going to make people want to potentially invest in higher risk assets again. But we're not there yet. And I still think that's going to take some time to get to.
As Cowen shifts the discussion toward altcoins and market participation, the message becomes even more nuanced and more sobering. In previous cycles, major altcoin rotations were fueled by rising retail interest, expanding liquidity, and euphoric sentiment. Today, those ingredients are largely absent. Retail participation is declining, trust has been eroded by years of speculative excess, and capital has overwhelmingly favored Bitcoin as the cleanest macro trade in the space. That doesn't mean altcoins are dead, but it does mean the rules have changed. Cowen's view suggests a long period of consolidation rather than explosive rotation. Some individual projects may outperform in isolated windows, just as they have in recent years, but broad-based alt seasons require conditions that simply don't exist yet. Institutions may eventually expand beyond Bitcoin, but only once monetary policy turns decisively looser and risk appetite returns at scale. Until then, patience, not prediction, may be the most valuable strategy. Zooming out, this leaves investors at a crossroads. On one side are analysts like Raoul Pal, who see a shorter-term liquidity-driven pause before the next explosive phase. On the other hand is Cowen's framework, a longer, slower reset where fundamentals rebuild quietly before momentum returns. Both perspectives agree on one thing: crypto is not dead. It's evolving. Whether this breather lasts months or years remains uncertain, but the long-term trajectory continues to be shaped by adoption, macro forces, and capital cycles far larger than any single chart. If you found this breakdown valuable, hit the like button, subscribe for more deep dive crypto analysis, and let us know in the comments where you stand. Are we closer to the next breakout or still deep in the reset phase? Thanks for watching, and we'll see you in the next one.